Welcome to the part 16 of the series on volume spread analysis. In this part, we will be looking at the combination signals which have been incorporated in the VPA 5.0. In the last session, we looked at the derived signals. Now we will be looking at the combination signals. Let's quickly look at what are derived and combination signals. A derived signal is a signal based on failure or a negation of a SOS or SOW, or it can be a confirmation of a SOS or an SOW. SOS is of course the sign of strength, and SOW is the sign of weakness. The combination signal is a signal based on a sequence of conditions and subsequent price action. Now let's look at our first combination signal. The first combination signal is called trend change. It's a sign of weakness. And in the trading view, it is displayed as TC or trend change. Now, what are the conditions for this sign of weakness? First, the major and the medium trend should be up. The previous bar should be a widespread up bar, and the current bar is a down bar closing down with the above average volume and spread. The high of the current bar is the highest of the last 5 bars. Clearly, the stock must have been moving up because the major and the medium trends are up, and the current bar is the high is the highest of the last 5 bars. That means the stock has been going up with momentum. The previous bar is a widespread up bar, and the current bar is a down bar closing down, that is near the lows, with above average and volume and spread. What it means is there has been a lot of selling in this current bar. That is why it is closed down. Though it opened high, the high is the highest of the previous 5 bars. It would also mean that the previous bar, which is a widespread up bar, there has been lot of passing of stocks from the strong hands to the weak hands. That is why the current bar is a down bar closing down with above average volume, and also the spread is high. Clearly, a lot of stock has been passed on to the weak hands, so we can expect more weakness to come, and the supply should come in, pushing the stock prices down. This is the logic behind this trend change. Now let's look at the examples in real life. In the first example, I have the chart of Hindustan Petroleum, the daily chart, and as usual, we are using the replay mode. Now our chart starts from the 22nd July 2022. Now let's start looking at how the prices play out. Been moving slightly sideways. Now we can see the minor trend is up. Again, little more sideways. Now we can see it started moving up, and the minor trend has also changed to up. Now we have all the 3 trends you can see in this indication are moving up. And the next one, we have a TC bar, trend change bar. The previous bar, of course, was a widespread up bar closing up. and the current bar is a down bar, but the high of the current bar is highest of the last 5 bars, and the spread is also, can see, above average spread, and the volume is also above average. So it clearly meets the conditions for a trend change bar. Ideally, we should see a lot of weakness coming and the price should move down. So to confirm that the weakness has come, one method we can use is to draw the low of the previous up bar. So if this is broken, then we can be assured that there is a lot of weakness coming in. And any further uptrend can happen only if this low is taken out or this level is taken out. Now let's see how the prices play out. Little sideways move. Then you can see a huge down bar here. You can see a lot of weakness. Eventually the prices started going down here. So this can be a guide line for us. This level low of the previous up bar will be a good reference line for us to ascertain if there is a lot of weakness coming in or this weakness will be negated. This is a very good or very convincing signal, this trend change bar. Most of the time, you would see that the weakness is really come in and became profound. Let's go to one more example. I will take the chart of the ICICI Bank. Here you can see we have a trend change bar here, because high is the highest of the last 5 bars. We take the replay mode and we'll see the conditions here. Already the major and minor trends are up. So you have an up bar here, a widespread up bar and above average volume, and the current bar is a down bar on above average volume, and the high is the highest of the previous 5 bars. It clearly meets the conditions of the trend change bar. So we will follow our method of drawing the line or the level of the low of the previous up bar, and let's see how the prices react. This is still not crossed below the previous bar, so the weakness has not come in yet. Now it is clearly, it is pushed below the level using a effort to move down bar on increased volume, and the prices are going down. So see, this level is a good reference for us. So this is another example of the trend change bar. Now let us look at the second combination signal. This signal is again a sign of weakness or SOW, and it is called the sell condition exists. Now it can be of two conditions. but the program we have defined two conditions. The first condition is the last bar is an upthrust bar. The current bar is a widespread down bar with a volume more than 1.3 times the average volume. And the second condition is that current bar is an upthrust bar with volume more than 2 times the average volume. In the trading view, the signal is called SCE, or the selling condition exists. Now, if you would look at the first condition, it almost overlaps with the condition for UT2. So you would rarely find this condition giving a SCE signal. Most frequently occurring signal is because of condition 2. The current bar is an upthrust bar with volume more than 2 times the average volume. That means an upthrust bar with huge volume means there has been a lot of selling, lot of weekends trapped in these bars. So definitely it will call for more weakness, and a selling condition does exist. So you would find this condition more often than the first condition. Now let's look at some examples. In this example, I have the chart of Adani Ports. The stock has been moving up and then slightly going down. Our chart starts from the 20th of April 2022. Let's see how the prices play out further. Little effort to move up. Again, you have a effort to move up bar on very much increased volume. That effort to move up is trying to be defeated here, but one more effort to move up bar on increased volume. So the prices are being pushed up here. Then you have a UT bar and an SCE bar. It's a combination here. So this SCE indicates there is a lot of weakness here and there is a selling condition exists. So we have to see if the weakness is really profound and a selling condition does really exist. We have to see in the subsequent bars. So it is always better to have a reference line here. So here I will draw the level of the low of the previous effort to move up bar here. So this is our reference line. Below this line, the weakness will become more profound and it will be confirmed weakness, and the selling condition does really exist. So let's see how the prices play out. The next one was an UT2 bar. So we are very clear that the selling condition is getting confirmed here, but our reference line is here in the low of the previous effort to move bar. Here you can clearly see the prices are being pushed down below our reference level with an effort to move down bar here. You can see the prices moving down a lot here. So our indication SE was very correct in pinpointing that there was a condition to sell at that point, and we had the reference line here. So this is our last line of safety. So this is the line before, or the level after which we need to sell, because the confirmed weakness is there. So this is again a very good tool for us. That SCE bar is a very good tool to pinpoint weakness here, but always be need to have a reference level to ascertain the weakness and plan our trade. In the next example, I have the chart of the KPR mills, and our chart starts from the 6th December 2021. As you can see, the overall movement has been little up here, and currently it is moving sideways. Let's see how further moves happen. You have an UT1 bar here and an upthrust bar here. But that failed here because you saw a down bar here, but all the weakness of the UT1 bar has been negated by these two up bars on higher volume or above average volume. You have an effort to move up here. Now we have a UT bar with an SCE condition as well. So we can expect more weakness here because there is a sell condition exists. So as usual, let's draw the level of the previous effort to move up bar. So let's see how the prices react. So this is our reference level or the critical level below which we should see the weakness getting more profound. The next bar confirms that sell condition here, but still it's above our reference level. And now we have another up bar here negating the weakness. Sideways move here and another good, very widespread effort to move a bar on increased volume. It is now even surpassed the high level of our UT bar. So here in this example, though we got the condition of selling condition exist, and the next bar even confirmed the weakness, but the whole weakness was negated by the subsequent bars, and it clearly went above the UT SCE bar. You can see the stock went up further here. After a little consolidation here, it went up further. So in this example, we saw the SCE bar failing here. So always you need to look at the subsequent price action and draw your reference lines so that you can really judge where the prices are heading. So drawing these lines and seeing where the price is going is very, very important. Unfortunately, this video has also run into the time limit and we have not covered all the combination signals. So let us stop here and go for one more video to complete the remaining combination signals. But before we close, let's quickly summarize what we learned in this session. In this session, we saw the combination signal. A combination signal is a signal based on a sequence of conditions and subsequent price action. So we looked at two combination signals. The first one is called the trend change or TC bar. It is a signal of weakness and it is a quite reliable signal. The level of the previous U bar is a good reference line for us. The second one is called the SCE bar or the sell condition exists. This too is a signal of weakness which is also reliable. The level of the previous EU bar plays an important role for evaluating the weakness. So in the next part, we will look at the remaining combination signals in the VPA 5.0. In order to get notified for the release of this part, please do subscribe to this channel. In case you find this video useful, please do press the like button. Thank you.